Good morning and welcome to a new episode of BVTV with me, Nicolò Carpaneda, Investment Director of Fixed Income. Today here just by myself to discuss on quite a few peculiar stories related to emerging markets. Year to date, we have seen episodes of negative performance and also volatility picking up significantly. And I think there's a feeling among market operators that emerging markets as a block are back into trouble. But this is not necessarily true. Among the many metrics that we can show, this one from the IMF is showing that the current account deficits in general, on average, are not deteriorating in emerging markets and are quite stable. And in general, growth has been solid and continues to be solid, and fundamentals continuing to be in good order. So what is really happening is down to some specific events and headlines. And I want to start from Argentina, then we'll go into emerging market effects in Russia. I think Argentina has two sets of different problems. The first one is that it requires a lot of external financing that needs to happen mainly in dollars. And the worst possible situation for you as a country in need of money is when the US is tightening monetary policy and the market notices. So when US interest rates go up, especially in the short term, and the dollar gets stronger, you are in trouble. And Argentina has a current account deficit which is significant of minus 4.9%. The second issue in Argentina has been a monetary policy error. The central bank in December decreased the inflation target at a time that inflation was in fact growing stronger. Instead of hiking interest rates, they have been cutting and they lost credibility. And since then, the peso, the Argentinian peso, has been attacked. Year to date, the performance of the peso versus the euro has been minus 22.6%, versus the dollar minus 24%. What is significant is that only in May, the peso lost the ground by minus 18%. What I want to show you in this chart, though, is that thanks to what has happened last week, Argentina has been able to roll over $25 billion of short-term debt, which has been very good news in the short term for the market. You see the Argentinian peso year-to-date stumbling versus the euro here, but in fact it seems that it found a bottom. And my opinion is that when interest rates are at 40%, inflation at 25%, you as an investor, you bring home a real income of 15%, that's quite a good opportunity of yield income for you available in the market. So it might be that the peso found the bottom. If I can move to topic number 2, emerging market effects. Also, if we look on the left-hand side, all major emerging market currencies have underperformed against the dollar year to date. But if we plot the same currencies against the euro on the right, some of them have done well. And so in reality, more than a weaker emerging market effects block, we have a strong dollar story. If I can show you on this chart, we are not surprised on some of these currencies. On the bottom of the chart, you see that the worst underperformers versus the euro, it is not by surprise that they have the biggest current account deficit. And Argentinian peso, Turkish lira, Brazilian real, and Mexican peso all have significant current account deficits. But actually, the fifth top underperformer, which is the ruble, is the currency of a country with a current account surplus. And in fact, I want to show you that the ruble between March and April did really poorly versus the dollar. You can see on the left-hand side that it stumbles big time against the dollar. But on the right-hand side, we try to look into the ruble versus the dollar and the Russian 10-year. And there's quite a good correlation, as you might expect. But after the big sell-off due to the threat of US sanctions onto Russia, which, by the way, are not being agreed yet by the US administration, the ruble has continued in recent weeks to do not really well, despite a strong oil price. Year on year, the GDP growth in Russia is only 1.3% with this strong oil, and so we might expect the ruble weakness to continue. I want to leave you on a new chart that compares the weakness of the Russian 10-year government bond because of the threat of US sanctions with the BTP 10-year. Last week sold off in significant terms, and you can see that the volatility has been even higher than in Russia because of this new government that is being formed. We'll see what happens. Thank you very much, and goodbye for now.